Hey guys, welcome to another episode with me, Shshank Udupa. And in today's episode, we're going to talk about stocks versus mutual funds. Now, I know everyone's confused which option's better, what is good, should we invest in stocks, should we invest in mutual funds, and what are the different criteria that we need to look at while investing in these things. Now, both of them are pretty much good in their same arena, right? So, for example, direct stocks have obviously great potential for returns, but the risks are also very high. And if you look at mutual funds, they are slightly safer, but checking the expense ratio here becomes very important. So in today's episode, we'll understand what the definition is about stocks and mutual funds, and we'll go through some pros and cons of buying direct stocks, some pros and cons of buying mutual funds as well. And then I will show you a table which shows this comparison between stocks and mutual funds. Now, what is the definition of stocks? Right, buying a stock basically or simply implies that you're buying ownership in a particular business. Now, let's take, for example, you buy a share like Reliance, you buy a share like Tata Motors or any other stock, right? You become a part owner of that company. Now, if the company has good growth in terms of sales and profit and the cash flows going up, then obviously the share price of the company will go up. So you benefit. Or if the company also says, you know what, I'm very happy with my shareholders. We've got a great return this quarter. I want to give something known as dividends back to my people. So you will also win as a shareholder. So ideally, if the stock does well, you will do well as well. If the company doesn't do well, the stock price will drop and the dividend payout will also be less. Now, similarly, what is a mutual fund? A mutual fund is basically a pooled investment vehicle in which an investor gives money to a professional fund manager. Right? This is basically a pool of money that a lot of people, you give me, I give, someone else's give, they'll pool the money, give it to a professional guy to run this entire business. Now, the fund manager then takes this capital and starts investing in different companies right now. Now, he will do all the research. He has a team to manage all of this and they will start investing. But here, obviously, he's not going to do it for free. There is something known as expense ratio. Now, expense ratios basically includes the fees charged by the fund manager and the mutual fund house expenses. Now, obviously, the fund manager has a salary, his team will have a salary so that he can work hard for you and get some money for you as well. What are the pros of investing in direct stocks? Obviously, it is easy to use. Buying and selling of a stock can be done literally in seconds now in the tap of your mobile phone as well. Now, higher potential. Now, if the company does well, then the stock price can go up and obviously you can get great amount of returns. And then we have something known as negligible trading cost. Nowadays, if you've seen if you look at the online brokers right now, we have zero brokerage cost. So trading brokerage is currently negligible today. It's not even a problem. Let's look at the cons. First thing, we always know that in the stock market, if you invest in stocks, is very high risk. So your potential for returns are big, but also your risk is very high because there's too much volatility in the market. Second, researching and picking good stocks takes time. And obviously, it's a lot of effort for someone who's busy in their day-to-day work. It might be very difficult for you to find out and take some time out and do some research on this. And the last but not the least, the biggest con that I see is stress. Unnecessary stress, so much tension because you put so much money into the stock market, and if it starts crashing, you are very scared, and the market is very volatile. It goes up and down, up and down. So the stress can also affect you a lot. So these are some of the pros and cons of stock market. But let's look at some pros and cons of mutual funds now. The pros of mutual fund, it is low cost. Now, if you invest in a direct plan, okay, or a passively managed index fund, your cost of investment becomes very low. The expense ratio is very low in these things. It also helps you with diversification. Now, mutual funds basically invest in a basket of stocks, thereby diversifying your capital across different companies. And if you had to go buy nifty 50 companies, it would be very expensive for you. But if you invest in a mutual fund, they'll do it for you because he's pulling money from everyone. And less stress. Why? Because there is an expert fund manager sitting there and doing all of this for you and taking a small fee from this. If you diversify your investments a lot, the volatility starts getting reduced. Similarly, your stress levels also start getting reduced. Okay. Let's look at some cons here. Now, some schemes, if you don't read it properly, some schemes have a high expense ratio. They also have something known as an exit load. So there are chances that this can increase the total cost of your investment. Not only will they take something on your expense ratio, not only will they charge some fees for you, but even when you exit, they take a small money from you, right? Now, another problem here is underperformance. What if the fund manager is not good? And what if you invest in an actively managed fund and the fund manager's decision maybe went wrong and your entire investment portfolio may underperform the market? So this is another con as well. Next, I'm going to show you this table. Look at this. It's the table between stocks versus mutual fund, and we will go through it one by one. Now, at the start of your investment journey, you may avoid direct stock investment in the beginning as risk involved is very high. So if you're just starting your journey, I would go for mutual funds, and in mutual fund, you can opt for ETFs or index funds. The second thing, when you're tracking your investments, from stock picking and monitoring to allocation, everything needs to be done by yourself, which is again very difficult. But if you are investing in a mutual fund, the fund manager takes care of this stock picking, monitoring, and managing allocation. So he will do all the stuff for you. Third, risk versus returns. Now we know stock market is high risk, high returns. Whereas if you look at mutual funds, the risk involved is comparatively less because mutual funds are reasonably diversified. And you can also select funds, by the way, that have a very low risk profile as well. Let's look at some tax benefits. Investing in equity, not many tax benefits here. In fact, you have to pay a lot of taxes. Now, investors can get tax benefits in mutual fund under something known as ELSS, which is Equity Linked Savings Scheme, which is a scheme that you can get a tax benefit up to 1.5 lakh rupees. Control over your investment. Now, in stocks, you get full control over your investment and you can buy and sell anytime you want. Whereas in mutual funds, you have little control on your holdings because the fund manager is the one who's managing your capital actively. So if you don't like a particular fund or manager, you can switch to another fund, but the investment decisions are taken by the fund managers only and not you. So guys, that was it for today's video. Just to recap, we spoke about stocks, we spoke about mutual funds, pros and cons of investing in both, and a nice comparison table talking about both. Now, if you like this episode, please click on the like button, share this with your friends and subscribe. By the way, I also want to tell you that we post similar content, similar educational stock market content and investment videos in Tamil, Telugu, Kannada, Gujarati and Malayalam. So if you want to watch any of those videos, then you must subscribe to this channel and the links will be given in the description. Okay, so this is me, Shshank Udupa, signing off. I hope you learned something from this video, and if you did, click on the like button, share and subscribe. See you soon. Bye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.